Get ready, because Target's about to drop their third quarter 2024 earnings report on November 20th. Mark your calendars, folks, because this is one event you won't want to miss. This is huge news for investors, especially after a year of ups and downs in the retail sector. The retail landscape has been a roller coaster, with fluctuating stock prices and unpredictable market trends. We're all dying to see how Target's been navigating the choppy waters of inflation, interest rates, and those pesky consumer spending habits. With prices rising and consumer confidence wavering, Target's strategies will be under the microscope. This report card's going to be full of juicy details, everything from earnings per share to revenue figures. Analysts will be poring over these numbers to gauge the company's health and future prospects. But more importantly, we'll get a glimpse into Target's game plan for the holiday season. The holiday period is crucial for retailers, and Target's approach could make or break their year. And trust me, that's where the real fireworks are going to be. The holiday season is a make or break time, and Target's performance will be closely watched. Analysts will be dissecting every word, looking for clues about Target's future. They'll be searching for any hints about upcoming strategies, potential challenges, and growth opportunities. This report is going to be a wild ride, folks. Buckle up, the stakes are high, and the anticipation is palpable. Get ready for an exciting journey through Target's financial landscape. So, what are the analysts saying? What insights are they bringing to the table this quarter? Well, the consensus on the street is that Target's going to report earnings per share of $1.70. This figure is being closely watched by investors and market watchers alike. That's a decent jump from last year's $1.42. This increase signifies a positive trend and could indicate that Target is on the right path. Now, we don't have any hard numbers on revenue just yet. The anticipation is building as everyone waits for the official figures to be released. But whisper it with me, folks, stabilization. That's the magic word. Stabilization in revenue could be a game changer for Target. Some analysts are even whispering about a potential uptick in sales. Could it be? Could we be on the verge of seeing a significant turnaround? Could Target be turning the corner? This is the question on everyone's mind as we move forward. Remember, this is a company that's been battling inventory woes and a pullback in consumer spending. These challenges have been significant hurdles. So, seeing any kind of growth would be a major win for Target. A positive shift in sales trends could mark the beginning of a new chapter for the company. Now let's talk strategy. Target's been slashing prices like crazy lately. They're clearing out inventory and trying to lure back those bargain-hunting shoppers. On the one hand, these price cuts could give sales a much-needed boost. But here's the catch. Lower prices often mean lower profit margins. It's a classic retail dilemma. Target's walking a tightrope here, trying to find that sweet spot between attracting customers and protecting their bottom line. Section 4, Wall Street's mixed signals, bullish versus bearish. So, what's the overall mood on Wall Street? Well, it's a bit of a mixed bag. Telsey Advisory Group is feeling bullish. They upgraded Target's rating to outperform. They're betting that Target's strategic moves are going to pay off big time, but not everyone's convinced. Evercore ISI is singing a more cautious tune. They downgraded Target 2 in line, citing concerns about the challenging retail environment. Seems like there's still some uncertainty about Target's ability to navigate these choppy waters. Section 5, Navigating the Macroeconomic Storm. In this segment, we delve into the complexities of the current economic landscape. And let's face it, folks, the economy's been throwing some serious curveballs lately. From fluctuating markets to unpredictable consumer behavior, it's a wild ride. Inflation is cooling down, which is good news. However, this doesn't mean we're out of the woods just yet. But the Fed's still raising interest rates, which could put a damper on consumer spending. Higher interest rates often lead to higher borrowing costs, affecting everything from mortgages to credit card bills. And let's not forget about those pesky consumer spending habits. Consumers are becoming more selective about where and how they spend their money. Shoppers are still being cautious, especially when it comes to discretionary spending. Items that aren't essential are seeing less traction. Target's gonna have to work extra hard to convince consumers to open their wallets this holiday season. With the festive season approaching, the stakes are higher than ever. The big question is, can Target's strategic initiatives overcome these macroeconomic headwinds? Their approach will need to be both innovative and resilient. We'll have to wait and see what the earnings report reveals. The upcoming financial results will be a crucial indicator of how well Target is navigating these turbulent times. If you found this analysis helpful, make sure to hit that subscribe button and stay tuned for more updates on Target's financial journey. Thanks for watching.